Hello everybody and welcome to the midweek market update from Smack the Markets for the 22nd of May. So far this week the US dollar has continued to strengthen and that's supported many of our trading opportunities that we've been looking at. But going into the second half of the week, it's looking like the Great British Pound is going to sort of dominate as being again one of the sort of most weakest markets out there. That's supported at the moment by the less than sort of positive news that's sort of coming out from the UK on the sort of political front. I think until we get some positive news flow there doesn't seem to be an awful lot sort of supporting sterling. So let's go and take a look at how the markets have fared that we talked about in Monday's newsletter. So if we take a look at dollar Sing first of all, we were looking at opportunities here back on Monday, back into the moving averages here on the 4-hour time frame. In fact, this was our trade setup that we took here in the trading room, and you can see that the market has carried on, or the trend has carried on now nicely, and it's reached its sort of final destination, which was that 138 level. The reason why we had that 138 as the sort of final target is because there is a sort of significant structure level here on the higher time frames. So dollar Sing, we're still sort of bullish dollar Sing, but at this moment in time, I'd rather see the market sort of get above that level before looking at sort of new entry opportunities. If we come and have a look at the Dow Jones here, this is the Dow futures contract. This market now really hasn't sort of moved a great deal in the whole sort of grand scheme of things. If we take a look at this on the daily chart, the markets had a retracement back towards, well, just shy of the 500 level, and then rallied back up to the 25,850 level again. Now this 25,850 is a key decision point area, and it's sort of featured in a lot of our analysis and a lot of our trading decisions. So markets are back at that sort of key area at this point in time. In the context, I suppose, if we take a look at this on the 4-hour, in the context of a sort of rising lows within the sort of context of this 4-hour trend. However, at this moment in time, it really is at decision point area, and we've always sort of classified 25 sort of 850 as a key decision point. Now, our bias is still towards the long side here. We're trading this on an intraday basis at the moment. We haven't had swing plays on this, but it's more on an intraday basis, and we'd certainly be looking for new longs if we can get again opportunities to get sort of positioned above 25,850 on a intraday basis. The reason why we're liking this one to the long side, and it really sort of stems if we come back to the higher time frames and take a look at the macro picture here. So on the weekly chart, you can see that the market's pulled back into 25,500, that big sort of key level. We can see how decisive this and important this level is here on the weekly chart. And last week's candle putting in a rather sort of bullish sort of doji candle there. Now currently this week so far, you can see the price action has come down. It's almost sort of tested 25,500 and it hasn't quite broken the high yet. So the high here is going to see us a test there of that 26,000 level. And if we get that this week, then we could be looking for a continuation on that weekly basis, and that's going to see this market sort of move higher. So that's why we're more looking at intraday opportunities on the Dow and the US indices for that sort of scenario to play out, preferably to the longer side. Now, we also looked at oil, and we spoke about oil on Monday. Our bias here for oil is towards the long side, and the reason being, well, partly because of the sort of technical structures that we've had on oil, but also because of the constricting supply of oil throughout the sort of world producers at this moment in time. Now, from a technical perspective, we haven't had an opportunity here, and the market has softened off from a technical perspective here on the 4-hour time frame. So there hasn't been sort of an opportunity for us to get sort of positioned here. Our bias here has been long. We've been looking at long opportunities above sort of 63.15 up towards that sort of final top of that trading window there, which is around that sort of 64.80 level. So going into the second half of the week here, one of the other markets here that we're looking at and rather liking is euro against the Kiwi. The reason being, if we take a look at this on the weekly, is that this market has broken out of a significant structure point here on the weekly chart. Now, the euro is not particularly one of the strongest currencies out there at the moment, but the Kiwi is one of the weakest, and that's why we're seeing this strength in this market coming through here. So we've broken through into a new trading window here, and there doesn't look like an awful lot in the way for the higher end of this sort of trading window, which comes in around 175. So that's quite a decent sized move to the long side. If we come down the time frames and take a look at the sort of daily chart, we can see that we've got very well structured trends forming on this sort of daily chart, and in fact on all of the mid time frames and intraday time frames as well. And we've got a nice sort of clean breakout of that sort of structure point here on the daily chart too. So again, looking for long opportunities, and we'll be utilizing the sort of techniques that we look for when the market sort of pulls back into value areas to get positioned. So there's a few markets there that we're keeping a close eye on in the trading room throughout the remainder of this week. I certainly sort of hope it helps, and look forward to speaking to you next time. Bye for now.